Alright, wanted to answer this real quick. You're asking about breakouts of channels, so a bull breakout of a bull channel, how to trade it. I'll give everybody a second to read this real quick. You can pause it if you want. Anyways, starting with this right here, it's going to be, so right here, I believe these are the same. Yes, they are. Alright, so anyways, I have it pulled up right here on the, you said it's the 29th. And I believe it's right here. You can argue spike and channel. More importantly, I'm not going to draw a larger channel, but I believe you and I'm sure it's there. So notice here, you can argue this is a large channel, bull channel, bear flag. Maybe we got some sort of leg one. Not really. Anyways, let's get into the main part of the question here. You're talking about this, you can argue wedge here. Let me see just how you drew it to get the better. Yeah, I mean, you could argue that first push, second push, third. So you drew kind of a wedge, something like that, and that's understandable. I think the most important thing is this. What you have to look at and see is this a channel? Are we breaking out right here? Are we breaking out of a channel, or are we breaking out of a trading range? So, just for fun, let's flip to a 60-minute chart. Okay, so right here, we arguably 3 pushes, first, second, third, 60-minute chart. Right here, notice right here, so notice this high. We broke above it and pulled back down below here. So if you sold this high and sold this close and sold this close, scalped out at your first entry, you would have made money. So the odds are here, if anybody sells above here, they will make money. So with that said, context really is everything. I can't seem to really find. Just kind of messing around with trend lines. Anyways, back to your specific question. I'm not used to the Globex. I just trade the day session, but like I've said before, I think both are perfect and both work equally as well. So, a couple things I notice here. Let's say this is the channel. First, second, third, we're getting a wedge, trying to break out of a wedge. 50-50 chance it went, it succeeds, 50-50 chance it fails. However, with here, breakout, it failed. We got to break out of this. It failed. So breakout here, it failed. Bears are shorting, arguably, bears sold this high, made money. Bears will sell this high for a scalp. They'll sell here, they'll sell 1 point higher, 2 points higher, make money. They'll sell this high, 1 point higher, 2 points higher, scalp out. So what you need to notice here is it's still a limit order market. Bulls are buying, scalping out at new highs. Bears are shorting breakouts, scalping out. Now notice this bar right here, right at 9:10 Central Time. Get a close, buy the close. Bulls bought this close, scaled in lower. You bought this close, it was at 20.8175. Price went to 20.82. I remember this day actually. On the daily chart, or daily session. Anyways, what does this tell you? Let's pretend you bought this close, you scaled in a few points lower. Everybody on this bar was so eager to get out at this close that they sold here, maybe bought more here, had to stop somewhere down here. As soon as price came all the way back up, they were so eager to get out at break even on the original, we just sold off. So, really, I think that's kind of a good indication we might be failing. However, with it being a trading range, you have to remember, in a trading range, signal bars never look good. You get a low too short, terrible signal bar. I just want to see something. Okay. Notice here. There's two things I see. Every tick is always important, and you don't. The reality is you don't have to notice everything, but if you do, the more you notice, the better your odds are. So we just talked about this tail. One tick above, sold off. What about this tail? There's a certain reason, and I just pointed it out on the screen, if you can tell, why this bar paused right here. Let's say you bought this close, going for a scalp, and you added on a stop entry. So you buy this close, you buy one tick above this bar. So let's just make it perfect just for fun. Oops. Bear with me a second here. Okay, so 2080. Okay. I can't really tell. Either way, it doesn't matter. This bar went either touched the bulls who bought this close, bought on a stop. It touched their break-even point on the entire trade, so they buy this close, add on here. So disappointed, they just try and get out break even on the entire trade, minus commission. Price went one tick above, two ticks above, probably just one tick above, or touched their entry, their break even point, and sold off quickly. So this tells you that the bears who are buying high are in trouble. Excuse me, the bulls buying high. Bulls who bought here, scaled in lower, made money. Bulls who bought this low, scaled in lower, made money. The reality is, bulls who bought down here made money. Got a possible, you can argue a wedge, first, second, third. Even here. I believe price went up. Bulls aren't doing enough here. I just want to see something real quick. I know if you bought here, you got exactly 2 points. Yes, they did. So wherever the bulls bought, they made 2 points. Anyways, so you have to wonder, we're getting a lot of low twos. We're kind of channeling down, and bulls got the breakout. Anyways, back to your question. So I really hope that helped about this example here. This isn't enough. The bulls probably needed one more bar, and when they need one, at this close, they probably needed one more bar on 855. And when that's the case, bears know that and they short. So more into your question about what makes a good breakout of the channel. Well, here's a good example for you. I will look at, and this is the ES.D 60-minute. And let's look at this. Pretty sure it actually. Okay. Point being, we'll start with just this. You can argue bear channel. We gap down and we ended up getting a break out of a channel. So you have to be open to the possibility when you get this bar and you get this bar on the 29th. So 8:30, or excuse me, 9:30, 10:30, that we may be getting a breakout of a bear flag or bull flag, low probability event. So once you start getting this bar, here, and then 3 bars down, and then another, at this point, bulls gave up, and everybody agreed we're probably going lower, which it did. So let's just see real quick. Really, on a low probability event, you really got to convince the bulls. Sorry, I was just kind of, I had to think for a second. Anyways, I guess what I'm getting at is there needs to be some follow through with the channel. Let me see if I can kind of see. We'll look on a Globex chart real fast and see if I can see something that's just maybe you can argue that's a channel. We broke out of a channel. By the way, kind of the same thing here. So you buy that close, you buy this stop entry, scaling more lower, you buy that low, you buy this stop entry low. Right. So let's say you bought this low up here and you scaled in on a stop entry, you get out break even. That's what I was talking about earlier. Anyways, having trouble really finding what I want here. Same thing here. I'm just channeling up. You can call it a small pullback, and we're getting a bull break out of a channel. Probably a 1 bar final flag reversal. Probabilities favor failure. So I guess that's really, I'm not finding what I'm looking for, and that's okay. Let me look at one thing, make this a little easier for myself. Where was that one day? Bear with me real quick. Here it is. Here's a good example of breaking out of a channel. So we got arguably a spike and a channel, and this whole time bears sold this high, made money. They sold this high, made money. Sold this high, and there's a problem. Bears sell this high, scale in more, sell this close, and they're trapped. This bar tells you why buying high in the channel is low probability. Bulls got their breakouts. You can see, maybe arguably here. Well, anyways, the next day the bulls got their measured move breakout. So this was a low probability event because the trap traders in, bears shorted, scaling in, they're trapped. Trap bulls out, and they looked to buy a pullback. So, you know, that's really all I got. Also, we'll just pull back 50%. So I hope this helps. Let me know if you have any more questions or if I can clear something